I'm going to get paid $754 to sell this single put option, which is a 45% annualized return. And in this video, I'm going to show you step by step from start to finish how you too can sell put options on the Interactive Brokers platform. The first step in this equation is to get your technical analysis locked in. So for this technical analysis session, I've looked at Coinbase because I believe they have a strong likelihood of moving up higher in the coming months, given that we are about 1 month post Bitcoin halving, and Coinbase's stock price tends to mimic the price of Bitcoin because as Bitcoin prices rise, more people get interested in Coinbase, more people want to make Bitcoin trades. So they have a kind of cause and effect relationship. And I'm thinking that there's some technical levels down here at 150, 163. These are kind of going back out in time with just some kind of areas where there's been lots of price movement. If we go a little bit higher, we see this yellow line around the 187 area, a common kind of topping out area back in December. It was also kind of flirted around here in February and the end of early March. And we've got this area here in this light blue where we've kind of ticked off over here a couple times. We've also kind of approached it here and kind of bounced up higher. So I'm looking and leaning towards selling a put in around this area. One, again, because I think that there's some fundamental reasons why the price of Coinbase will go up higher in the coming months, again, tied to Bitcoin. And I think that these price levels here are pretty significant in terms of it not going too much further past this 194 blue line here. And if it does, maybe it's only going down to this 187, 185-ish area right here. So that's kind of my kind of area where if I think the price may go and may kind of bottom out in the coming months. So I'm okay selling a put anywhere kind of in this area. We're going to go back into the options chain Interactive Brokers in a second and look at what we can get bang for a buck in terms of the options chain and the strike price and the premium you will see. But what we want to make sure, what we're trying to do here in our technical analysis, is just pick an area, again, looking at this blue and this yellow line, that we don't think the price of Coinbase or whatever stock it may be is going to go below. If the price does go below, right, that's the scenario we get into, we're going to end up having to buy 100 shares. If it goes above and stays above, no big deal. We pocket the premium. And if it kind of stays the same or kind of goes up and down, but doesn't go below in this kind of fashion, that's good too. We'll pocket the premium again and move on to our next trade. So we have our area, call it 195, 185. Let's go into the options chain now. That is step one. Step two is going into your option chain and picking the expiration date and the strike price. So we're inside Interactive Brokers now. We have our options chain here on the left-hand side. As you can see, I'm going to open it up for you for Coinbase. And we have, again, that technical level of 185 to 195. We want to go back. We want to see here, 185, 195, okay? The current price is around 207. So we want to make sure, as a general rule, when I'm selling a put option, I don't like to sell a put option with a delta above 25. Right now, 195 here is at 19. Okay, that's good. 185 is around 7. Okay. And you also want to make sure you're making at least 1% on every trade. As you can see here, to calculate that, we want to make sure that these numbers between the bid and ask are greater than the numbers here for the strike. So this is 190. This should be 1.9 at the minimum to get our 1% return. If you can find more than 1%, you're going to be making more money, more kind of bang for your buck. And I'm going to show you in the example that I just gave earlier in the video, I'm around about 4% for this trade. So if we go out in time, we can actually increase the amount of premium we're going to be paid because we're only at 5 days expiration right now. If we go out a couple of weeks to the 19-day expiration, these numbers are going to go up because there's more profit, there's more potential for profit on the table. But as we go out in time, we actually have the deltas kind of increasing as well. And we want to make sure we're under that 25 delta while also still making that 1% return. So that could be a good play right there. 185, 425, 460. But I'm going to go one more kind of expiration date further. We're going to go all the way up to June 21st and get to that 33-day mark. I like to kind of target 30-ish days when I'm selling put options. That's just kind of a personal preference for me based on how theta and time decay work. So when here, I look at 195, okay, we've got a delta that's right around 34 now, which is getting a little bit too high for me, a little bit too risky. What delta is telling you is that you have a 34% chance of not getting a sign at this moment in time, which is great. But my risk parameters for my trading tell me I want to be around 25 or lower. So I'm going to go back down 192, 190, 187, 185 to their kind of lower limit there. And I can see here that the delta is at 25. So it's right around kind of my top end range. So I'm okay with that for this trade. I have a bullish proposition for Coinbase. So now I look at my bid ask. And my bid ask here, I want this again to be over 1.85, which it's well over that. It's almost I guess it would be 4 times above that. If you go 1.85 times 4, you're going to end up with 4 plus 3.2. So you're going to be up at 7 and change. So it's going to be between the bid ask here, and the midpoint between those two is likely like a 750-ish kind of area. So that's good. That fits on my parameters. I'm 33 days out expiration date. I've got a good strike price that's in line with my technical analysis. And I've got a delta that I like and a bid ask kind of return or premium that I'm going to get paid that I'm also okay with as well. So as the seller, this red here, the seller of the put option, what I'm getting paid to do is take on the risk of, again, having to buy 100 shares of Coinbase. And if I end up buying those shares, it would be at my strike price of 185, right? That's the strike price that I've chose. And the buyer of this put option, who's kind of doing the dance with me here, they're hoping that the stock price of Coinbase goes down. If it goes down, they're going to be able to make a little bit more money. If the stock price goes down below 185, they're going to be making a lot of money, and I'm going to end up having to buy shares at 185 when they could be trading on the open market at that time at 180, 170. So it wouldn't be the best case scenario for me, but I'm still bullish on Bitcoin and on Coinbase. So I think this is an okay level for support. Remember, the price of Coinbase right now is currently trading up around here at 207. So it still has to come all the way down from 207 and change all the way down to 185, which it could do. But at that point, I'm just like, okay, I got paid about $750 to buy 100 shares of Coinbase, which helps you kind of lower down your cost basis and lowers down your max loss, which I'll show you in a calculation a little bit later on in this video. So we have a good amount of profit being brought in the door. We can click on this sell button right here. Red is sell in Interactive Brokers Trader Workstation here. So sell right there is going to pop into your order entry. Make sure your quantity is 1. You don't want to be selling more than 1 contract because, again, 1 contract constitutes 100 shares in this option trading environment. I'm actually having 100 shares in play. So it's going to be a 7.5 is the mid price between there. So I just go in here and I go down to 7.5 right there. I'd be getting paid 7.5 times 100, which is $750 in premium to make this trade, which is a pretty good return. Again, bang for your buck. It's right around that 45% annualized return, which I'll show you again in a moment. So now we open up this advanced tab right here to kind of get our max loss, max kind of profit scenarios and some risk-based kind of adjustments as well. Pop that open and then pop in margin performance. And our performance profile will be clicked on right here. And this is a very important screen for you to understand and realize what this represents. So first things first, we have a profit probability of 77%, which is really good in terms of, are we going to win this trade and be profitable? We want to have this as high as we can, honestly. And the more return and the higher the probability, that bodes well for making good winning trades. Then you have a max return of 705. And the max return of 705 is just that 750 minus a little bit of commissions and a little bit of rounding in there. So we have a 71% chance right there to have a 100% return for this trade. Our max loss is $17,700. And I'll show you right now how we calculate that, because you want to know what the max loss is when you're trading options or trading any kind of stock in general. So to calculate our max loss in this example, we want to make sure we have all these kind of things filled in up here, which gives us, again, our nice annual return of 45% there. We have the Coinbase stock ticker. We have the current price of 207.27, the strike price, which we selected at 185. The premium we're being paid, I'm going to change this to 750 because we're actually a couple cents less in this example. The capital that's required to make this trade is $18,500. So this is where the max loss comes in. If you were to buy 100 shares of Coinbase, right? 100 times 185 equals 18,500, right? That would be your max loss if you were just buying 100 shares. Buy 100 shares straight up. But because in our example, we actually got paid, again, this premium, this $750 max profit or premium, we have to deduct that from our capital requirement of 18,500, which makes our equation over here, the max loss area, it makes it our capital cost, 18,500, subtract the 7.5 premium times 100 shares or $750. So it ends up being 18,500 minus 750, which equals, again, $17,750. So around there is what we're willing to lose. And that only happens, again, if Coinbase's stock goes to 0, which is highly unlikely for many, many large scale companies in the stock market. Some really crazy stuff would have to happen for this to go to 0. And you inherit the same risk if you're buying 100 shares. If you buy those 100 shares for 18,500, it could still go to 0 and you'd be out $18,500 versus $17,750 in the example, because you got paid that premium upfront to sell the position. So we're going to come back to this again, and I'll show you how to calculate this return and annual return in a second. I just want to go and actually input that trade inside Interactive Brokers to get it in the hopper. So now we want to execute our trade and get it in our trading order area. So we click on submit right here, and we want to scroll down and click on this override and transmit button right there, which is going to get us a trading order that is in the area down here. It's going to pop open into your order area, and you'll have the sell 750 quantity of one. Once it gets filled, it will move into this trade area right here in the top left. And that will be a filled order in your account, which looks something like this when you go to check your portfolio. You can see in my portfolio, I've got Coinbase, June 21st, 185 put. I sold one, so the quantity is -1. The last traded price was $7.55. My current position is down about $16 on this trade. I actually sold this trade for $7.54 just a couple of days earlier. I've got 33 days till expiration on this position. My theta is showing there at -0.2, and my delta is right around that 25% area at 0.253. So that's what it looks like going through and actually setting up and selling that put option. Again, we have a pretty good profit potential in this scenario. Let's go back and look at our annual return and how we calculate that. So our overall return, 4% on the trade. Remember, my target area for what I like to do with my trades is about 1%. So a 4% is a 4x multiplier on that trade, which is a lot of cash for this position with the limited amount of risk that there is in this trade. To calculate this, we want to take the premium that we got paid, multiply it by 100 again, because there's 100 shares in every contract, every single contract. So it's 750 divided by the capital that we had to put up to make this trade happen. So $18,500. That gets us a return of 4.05%. Let's call it 4% for this trade with 33 days left till expiration. Okay. Now the annual return factors in the fact that this is only going to take us 1 month to do. So roughly we should be able to do this 12 times in the course of a year if market conditions were perfect. And your annual return is just taking, again, the return that you got, and we're going to apply some time constrictions to it. And we're going to go the return that you got for this trade, the 4%, right? The J3 times 365, because there's 365 days in a year, divided by the days till expiration that are currently there. So 33 days till expiration. So we've got 4% times 365 divided by H3, which is 33. And it gives us a 44% return on the year. And if you want a quick back of the napkin way to calculate this, you can look at this here. Days till expiration, 33 is about 1 calendar month. So you have that, you can make that 12 calendar months in a year because each one's made up of roughly 33 days, let's say. Again, we're going to be generalizing here a bit. You've got your return at 4%. You could do this, and you could then just go equals 12 times 4. You're going to get right around that annual return in that range ballpark of 44, 48%. Percent chance of winning the trade. Again, you saw this in Interactive Brokers, but I like to put it in here. I just take 1 and subtract the delta that I currently have on this position. So 0.253 means that I currently have a 74.7% chance of winning this trade. And that's a pretty solid number when it comes to selling put options. If you have kind of trading risk parameters, again, you could say I want an 80% win rate or an 85% win rate. It's just going to reduce the amount of capital or premium you get paid, but that is okay because you will in fact win more trades if you boost up this percentage of winning chances. That is how to sell puts on the Interactive Brokers platform from start to finish. If you want to know how options trading works, I'm talking calls and puts and how they go together, check out my 1-hour beginner level Options Academy course linked in the description of this video and also available right there. My name is Andrew Ferguson, and I teach new investors how stock options work using the Interactive Brokers trading platform. Thank you so much for watching this video, and I hope to see you on a future offering. Thanks so much. Peace.